Some headlines force us to rethink the global order. This is one of them. The Philippines, once a recipient of international aid, has now become a lender to the European Union. This isn't just symbolic. It's a real $250 million loan from Manila to Brussels. The news, confirmed in late 2025, sent quiet shockwaves from Makati to Frankfurt. It marks a profound shift in economic power and global perception. For decades, Europe gave aid and loans to countries like the Philippines. That script has flipped. Now, a resilient Philippine economy is extending a financial hand to a struggling EU. This act challenges old ideas of wealth and dependency, redrawing the world map. It's a story of national pride, economic resilience, and the rise of new powerhouses in Asia. Understanding this loan means understanding a key chapter in the 21st century. The certainties of the past are fading, replaced by a complex, multipolar reality. This loan is a symbol of that change, forcing us to look beyond outdated labels. The world is now a dynamic network of interdependent economies. In the next sections, we'll explore how this happened, what it means, and why it matters. Let's dive into the untold story of how the Philippines became Europe's lender. To understand this moment, we need to look back. For decades, the EU was the donor, the Philippines the recipient. European aid funded projects in health, education, and disaster recovery across the Philippines. But this relationship was unequal, built on European strength and Philippine need. The EU's GSP Plus scheme gave the Philippines market access, but with strings attached. Brussels held leverage, shaping policy from afar. Over the last 20 years, the Philippine economy transformed, driven by a young workforce, booming services, and remittances. The country weathered global storms and became a robust trading partner. Diplomatic talks shifted from aid to mutual investment and security cooperation. The Philippines began to see itself as a sovereign partner, not just an aid recipient. This shift set the stage for the unprecedented 2025 loan. The borrower became the lender. The deal came together quickly and quietly in late 2025. The Philippines, through its central bank, agreed to lend $250 million to the EU via a bond purchase program. This wasn't a gift, it was a strategic investment to diversify reserves and earn returns. Key Philippine officials, like BSP Governor Madala and Finance Secretary Diokno, saw it as a smart move. For the EU, the loan was a way to shore up finances amid economic headwinds and high energy costs. The timing was perfect. The Philippines had over $100 billion in reserves, while the EU needed new funding sources. The mechanics were simple. The Philippines bought EU bonds, lending money in exchange for interest. For Manila, it was a low-risk investment. For Brussels, a vote of confidence from a rising power. This transaction was more than finance. It was a statement about shifting global roles. The Philippines' strength met Europe's need at just the right moment. Let's look at the numbers behind the story. By the end of 2025, the Philippines' reserves hit $103 billion, a sign of economic strength. This growth came from sound management, strong exports, and $30 billion in annual remittances. The central bank called the EU bond purchase a prudent move to diversify assets and strengthen ties. Finance Secretary Diokno emphasized, "This is not aid, this is an investment." The Philippines is now making its reserves work globally, a mark of maturity and stability. European officials welcomed the move, calling it a partnership of equals. The $250 million loan is less than 0.25% of Philippine reserves, a calculated low-risk step. For the EU, the amount is modest, but the symbolism is huge. The transaction signals that emerging economies are ready to play a bigger role in global finance. The language has shifted from donor-recipient to mutual respect and shared interests. This is a new dynamic in international relations. The club of global creditors is expanding, and the Philippines is now a member. The political impact of this loan is profound. For the Philippines, it's a boost in prestige and leverage, no longer just an aid recipient, but a stakeholder in Europe's stability. Filipino diplomats now negotiate as equals, with more influence on trade and security. For the EU, borrowing from a former aid recipient is a humbling shift, forcing a rethink of its global role. This challenges the old Eurocentric worldview and encourages more balanced partnerships. The move also strengthens the Philippines' hand in Southeast Asian politics, especially in the South China Sea. By deepening ties with the EU, Manila builds a broader coalition for regional stability. The loan is soft power in action, creating mutual interests beyond finance. Other emerging economies may follow this blueprint, further decentralizing global finance. The Philippine loan could be remembered as a key step in a more multipolar world. Economically, the loan is a win-win. For the Philippines, investing in EU bonds is a safe way to earn more from its reserves. It signals to markets that the country is stable and creditworthy, attracting more investment. For the EU, the loan diversifies its funding and signals global confidence in its bonds. For Filipinos, this is a source of national pride and proof of economic progress. A stronger economy means more jobs and better services at home. For Europe, the impact is subtle, but real. Greater financial stability, and a reminder of global interdependence. The loan challenges stereotypes and fosters mutual respect between regions. It's a step toward stronger cultural and economic ties. In a globalized world, stability is a shared responsibility. What do the experts say? Dr. Eleanor Vance in London calls this a landmark. The shift of economic power from west to east is now reality. It's not just about trade, it's about the flow of capital and a new financial order. Manila analyst Miguel de Leon says the move shows confidence and ambition in Philippine leadership. The central bank is now leveraging reserves for profit and diplomacy, not just safety. This is part of a strategy to position the Philippines as a mature global player. Geopolitical experts note the move diversifies the Philippines' alliances, balancing regional power. Ties with the EU are now based on mutual financial interest, not aid or dependence. Development economists see this as the ultimate success story. A former aid recipient becomes a lender. Dr. Aisha Ndiaye in Geneva says, "This challenges us to rethink aid as a temporary support, not a permanent solution." The Philippines is showing what's possible with sound policy and vision. This is a powerful example for other emerging economies. The world's financial architecture is evolving, and the Philippines is helping lead the way. Beyond the numbers, this is a story about people. In the Philippines, the loan sparked national pride, a sign the country is finally being recognized for its resilience. For millions of overseas Filipino workers, it's a return on decades of sacrifice, turning remittances into global influence. The loan is a tangible result of their hard work, now shaping national policy. In Europe, the impact is quieter but meaningful, challenging old assumptions about Asia. It prompts a more realistic, respectful view of the Philippines and the region. The event can foster stronger people-to-people connections and cultural exchange. Filipinos see their country as an equal partner, breaking down post-colonial mindsets. The loan is more than finance. It's a bridge between two regions. It's a moment of affirmation and a step toward global citizenship. The Philippines' $250 million loan to the EU is more than a headline. It's a symbol of change. It marks a historic reversal, challenging old narratives of power and dependency. The Philippines has shown economic maturity, becoming a creditor and a partner in global stability. This is just the beginning of a new chapter in international finance. The world is interconnected. Prosperity is not a zero-sum game. One nation's prudent management can create ripples of stability worldwide. This loan is a testament to cooperation and shared interests. Will other emerging economies follow? How will traditional powers adapt? The story urges us to see nations as partners, not as developed or developing. With vision and hard work, any nation can change its destiny. Remember the day a Southeast Asian nation invested in Europe's future. The future is something we build together.